I'm Angela Miles with your Russell Report for this week. Traders are starting to disappear for the long holiday weekend. I'm already in Michigan watching the market action for you. Today, the call buyers are starting to perk up in the Russell. The ratio is one call trading for every 1.2 puts. So puts and calls are almost even. That could change throughout the session, but there seems to be some optimism about the trade talks. And a check of the options flow in early trading shows less of a downside positioning so far by traders in the Russell. Right now, the Russell is around 1504. The Russell has struggled this week to get above 1500. The index has been in a tight trading range of around 1460-ish to 1500. Among some of the larger trades today, let's talk about those call buyers I mentioned. Some way out of the money calls are active at the 1610 strike. Those expire October 4th. Yesterday, call buyers stepped into the options market with positions at the September traditional 1535 strike and December 1580 strike. Taking a look at the put options action, puts at the 1440 line expiring September 20th are active. I also want to mention a trader positioned in some November 1180 puts yesterday. Those puts are way out of the money. And there's a bit of a suggestion, though, before we get too worried about those puts, that we really could see a trading range to continue next month in the Russell. Yesterday, there were some September weekly puts active at the 1460 and 1450 lines. Those expire September 13th. Pretty much within the norm. The straddle for next week is forecasting a 2.2% move up or down. The RVX, which measures implied volatility in the Russell, is around a 20 today. That is the lower end of the range. Well, that's a wrap for me. Thanks so much for joining me and clicking onto my show. Have a wonderful and well-deserved Labor Day weekend.